Welcome back. We are now seeing even more and more narrative breakdown in the crypto bullish sector, with even the likes of Samson Mao slamming the Bitcoin core developers, saying contempt for users threatens the network's future. And so there's a lot going on here. I mean, we're now also hearing that the CBOE exchange plans to issue 10-year dated, meaning perpetual futures products for Bitcoin and Ethereum in the US. And as you guys know, the calls for the top of the market keep getting louder and louder and louder. I have been saying this since basically June of 2025 that the market has topped out, and anything that we see after that is just volatility. And I believe that we're seeing more and more evidence, more and more data that is showing us the market is about to fall. And I'm not saying in the next day or week. I'm saying over the next 3 to 12 months, we are going to see potentially large falls in some of the cryptos. I mean, some cryptos have already gone there. I mean, stocks as well. And we're going to be talking about some of those today. Stocks in the crypto sector losing 50% of their value. And again, if you look at the Bitcoin halving tracker, we are like maybe 20 days or less from where the top of the market was in the previous cycle and the cycle before that, from the days since the halving. And so let's get into today's video. Let's understand where we are in the cycle, what's going on, what are the signals, what are the large investors telling us, and what does the data show? Don't forget to give this video a free thumbs up and also hit that subscribe button. We upload every single day to bring you the latest happening in the financial world. Subscribing is free. You can also leave a super chat down below or click subscribe plus or join here on YouTube to learn more about becoming a channel member. And thanks to everybody who does support the channel with either thumbs up, super chats, or their membership. Let's get into it. So we're going to start right here with the CBOE planning 10-year dated Bitcoin and Ethereum futures contracts. These basically don't have any expiration, right? 10 years from now. And basically this is perpetual futures. And if you've been watching my videos for any length of time, you know that perpetual futures are very, very bearish for the market. We have seen this occur in the previous cycle with FTX, and we've seen the perpetual futures issue with Internet Computer. FTX had perpetual futures for Internet Computer, Cardano, and Litecoin, but they didn't have the actual coins listed on the FTX exchange. And if you look at those coins compared to pretty much every other coin in the market, and especially the FTX focused coins, basically those coins did terribly compared to the FTX focused coins. And that was because they were bidding down the price in these perpetual futures markets. The other thing to keep in mind, and go look this up yourself, the beginning of December 2017, which was the top of the market in 2017, what happened that day or the day before? Well, CBOE launched Bitcoin futures. And the day after they launched, straight down. What happened in 2021? The SEC approved Bitcoin options for futures and other derivative products for Bitcoin in the future space. And what happened a month later when it started trading? Straight down. Bull market was over. And so now we have a date. They are planning to launch these futures on November 10th, pending regulatory approval. And so if what we just discussed basically mirrors what occurred in previous cycles, this launch is going to indicate the pico top of the cycle. If we've not already hit it, I mean, there's a possibility we've already hit it. And by the way, this would also line up very, 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 very closely with the Bitcoin halving chart. Because I'm recording this basically about 60 days out, right? 2 months from November 10th. And so that would put us basically, each of these boxes about 50 days. That would put us right over here, being the top of the market, right over here. And so that would be kind of close, but potentially too late. Now, I don't know. A lot of people are saying that we're going to go much higher, that we haven't had euphoric movements in the market, even though some people say that we have. But that's really up to you to decide. I'm just telling you guys, this makes me very, very bearish. People are going to cheer it on and say, wow, they're going to have Bitcoin and future Ethereum futures, perpetual. This is great. It's not. Coinbase also launched. That's also, has the price of Bitcoin really moved up that much, or Ethereum? Since they launched those perpetual futures? No. The answer is no. So this is what we have to really look at. We're also seeing a lot of back and forth in the Bitcoin core community, and this is also pretty not great. Anyway, a dispute has emerged with the Bitcoin community, with the CEO of Jan3, Samson Mao, accusing Bitcoin core developers of treating users with disdain and warning that such attitudes could jeopardize the network's long-term success. He stressed that no project can succeed if the builders look down on the people that they are meant to serve. He said you cannot develop software for users that you despise. He pointed to specific behaviors that illustrate this claim, alleging that developers have been branding user nodes as fake and telling them they don't matter, and even engaging in DDoSing their nodes and laughing about it. He described this as appalling and suggested it stems from a problematic mindset, saying, quote, somehow, we've ended up with node software developers that have both a god complex and a victim mentality at the same time, end quote. According to him, the only solution is the return to professionalism and humility. He said, if you're really such a talented developer, then how come you're completely incapable of convincing people that your changes are good? Well, that brings us to the op return debate. This is really what is dividing the Bitcoin developer community. We're going to get to the op return thing in a minute, but Ordinals developers are also talking about forking Bitcoin amid censorship concerns. What? And by the way, the Bitcoin maximalists are barely talking about this because I think they know that this kind of back and forth is bad for the ecosystem and bad for the price. And this could potentially, even talking about forking Bitcoin at this point in the cycle, which is typically when the forks occur. In 2017, between August and December, there were like 48 forks of Bitcoin core. So this is not good. It's not good. And I really haven't talked about it too much on this channel because I didn't really even understand what op return is, but the op return controversy continues, and they're saying that these media in the Bitcoin blockchain may tank Bitcoin prices. A lot of the core developers are calling it spam or malware. And effectively, the whole thing comes down to the op return debate. Do they remove it? Do they add to it? And so we have to understand what op return is. Op return is a special script code in Bitcoin that allows users to embed arbitrary data into a Bitcoin transaction, marking that part of the transaction as unspendable. In simpler terms, it enables users to store a small amount of data on the blockchain without interfering with the network core functionality. However, the Bitcoin associated with that output becomes unspendable. Originally introduced as a way to prevent Bitcoin spam and enhance efficiency, op return now serves as a variety of purposes, such as timestamping, document verification, and even creating tokens that represent real-world assets. It provides a simple, flexible way to Bitcoin's blockchain for more than just key financial transactions. And so this is kind of what they're discussing, and what they need to do with it. Here's the deal. I don't know what the answer is. You guys know I'm an analyst and an investor, not an engineer or a developer. And again, being an investor is very easy because while they're debating and going back and forth about this, you can just sit it out and wait to see what they do. Because all this infighting between the developers and the core developers and small developers or small node operators and the ordinals developers now talking about forking the chain. What is the end to this? Like the core developers have their heels dug in, and the rest of the ecosystem's like, wait, why are you not accounting for what we're doing to help the network, right? And I think a lot of it comes down to maximalism. Maximalists, They want everything to be pure this. Like, oh, you're going to invest in Microsoft, or you're going to invest in NVIDIA? Why are you not investing in Bitcoin? Bitcoin is the best thing in the planet. Meanwhile, all the Bitcoin maxis are now starting treasury companies to buy Bitcoin with debt in the top of the market at all-time record. Like, if you can't see that we are at the top, whether we're at the Pico top or not, the sentiment is the top. And so the risk is much higher to the upside than, in my view, than to the downside. And there's a lot of people that don't see that. And a lot of people are going to get wiped out. But guess what? It is what it is. I mean, this is how investing works. Samson Mao said, I'm seeing news that Tether is selling Bitcoin for gold, and I think it's false. This guy right here from a video or article, it says, alert, Tether is selling Bitcoin and buying gold. What do they know? See the news from September 5th or SPET 5th. Anyway, he said this guy Clive is making the rounds now based on analyzing BDO's attestations for Tether. He came to the conclusion that because Bitcoin holdings dropped, they sold it for gold. And they did move some of the Bitcoin, but they didn't necessarily sell it or buy gold. He didn't factor in that Tether funded 21, the new Jack Mallers company, for a total of about 20,000 Bitcoin. So that means at the end of Q2, Tether would have that many Bitcoin more than at the end of Q1 if you combined it with the July transfers. Seems everyone is desperate for bearish Bitcoin news these days. Well, not really looking for bad Bitcoin news. I would imagine this guy's probably a gold bug. I mean, it looks like a gold bug, and it definitely does not look like a crypto guy. And so this is what we see every time gold starts pumping. They're like, you see, it's better than Bitcoin. Da-da-da. Listen, like, it is what it is. Paulo Adorno responded. He said, correct. Tether didn't sell any Bitcoin. As Samson below says, it contributed part of its stash to 21. And so he's saying to you exactly what I've been telling you guys about these Bitcoin treasury companies. They're not really buying Bitcoin. They're just moving Bitcoin from one entity to another, but that entity technically still owns the Bitcoin because you don't think Tether has a large share of 21? Of course they do. That's why they give up the Bitcoin. But again, if they didn't sell any Bitcoin, that means that 21 didn't buy any Bitcoin. And so that breaks down the whole narrative that these Bitcoin treasury companies are buying Bitcoin. They're not. They're not buying Bitcoin. That is a problem. And it's not just them. It's 21. It's, I think I have the Bitcoin treasury. I don't. I thought I pulled up the Bitcoin treasury company list. But anyway, Anthony Papagliano's company bought Bitcoin. 21, Bitcoin. Cantor Equity Partners, Bitcoin. Actually, I think that's the same thing. But you guys get it. All of these Bitcoin treasury companies are quote unquote buying Bitcoin, but it really seems to be just a movement of the funds, not really buying and selling. Like, think about it. We're going to talk a little bit deeper in MicroStrategy in a little bit from here, but if MicroStrategy is buying directly from the Bitcoin mining companies, technically they're not buying. They're just paying them. It's just a transfer. I mean, I get it. Buying and selling is just a transfer from one wallet to another, but it's different because it's not on the open market. It's not like you or I saying, well, I want some Bitcoin, right? It's them going to the source that are mining the Bitcoin and saying, give me this Bitcoin, or that have been holding for many, many years and saying, give us your Bitcoin and we'll give you shares of the stock. So yeah, Paulo is telling you here, Tether didn't sell any Bitcoin. And so if they didn't sell any Bitcoin, that means that 21 didn't actually buy any Bitcoin. Meanwhile, in the Ethereum side, SharpLink begins utilizing its share buyback program and reaffirms its commitment to long-term stockholder value. Now, you guys remember, this MNAV premium or discount is very, very important to understand. On the strategic ETH reserve, they have a whole column for it. And you can see SharpLink is 0.94. It should be at 1, meaning when you buy one share of SharpLink, you're getting 0.94 Bitcoin, right? Meaning you're getting a discount, right? You're getting, actually, sorry, I'm saying it backwards. Basically, you're getting you're getting a discount, right? Where with MicroStrategy, we know you're buying $1.50, basically $1.50 for $1 worth of Bitcoin. Here, it's the opposite. And so you're buying 94 cents for $1 of Bitcoin. So there's an arbitrage play there. And so the reason that MicroStrategy is selling shares in the open market is because they have that gap. They have that premium where their stock is worth more than what they're holding. So they can arb trade that. Here, they're doing the opposite, where they're arb trading to keep the price elevated, to keep the price at a 1 MNAV. And this is very interesting that they're doing this already instead of just buying more Ethereum to push that up. But again, these companies like Bitmine and SharpLink, they're not really. I mean, some of the purchases they're doing on the open market, but most of the purchases are private sales. Same way that we just saw with Tether and 21. And so does that break some of the narrative? I think it does. Meanwhile, look at where we are in the cycle. Trump Media is going to let Truth Social users convert gems into Crow tokens. Now, you guys know Trump Media and Truth Social, they just partner with Crypto.com, which is the founding entity, I guess you could say, for the Crow crypto coins. And so this is very interesting that they're integrating it. But, I mean, do you think that people are really going to do that? I think it's going to be very, very minimal. But people are going to say, well, this is great adoption for the ecosystem. I don't know about that. Anyway, Coinbase acqui-hires sensible founders to advance the everything exchange vision. And we're seeing Coinbase moving very rapidly in adding a lot of new things, a lot of new features, a lot of new capabilities. I think they're going to be tokenizing a lot of things in the near future. And so they really want to take on the finance world. And what's interesting here is how fast, how rapidly they're moving. Because remember, last year they were kind of in limbo. Like, is the SEC going to sue us? Are we allowed to have staking? Are we allowed to add more cryptos? There was too much uncertainty, and now the certainty is so clear. They're moving with it because they don't know where we're going to be in a few years, right? In the next presidential cycle, another administration potentially. And so they're moving very, very rapidly now to get these things implemented, solidify them in their ecosystem, and then hopefully continue to grow these products for a long, long time. But what else is Coinbase doing? And that could kind of tell us where we are in the cycle. Well, I mean, they just listed SPX 6900, which I thought was like some type of stock index, but no, it's a meme coin. And by the way, this meme coin is $1.36 billion. Okay, 1.36 billion. Internet computer, which we talk about on a regular basis, which has pretty incredible technology already. They're a $2.5 billion company, or crypto, I should say. $2.5 billion market cap with real data centers around the world and all that. And they're competing here with a meme coin. The SPX 6900 is a decentralized meme coin inspired by internet culture and financial satire. It launched on the Ethereum blockchain in 2023, and there's also bridged versions available on other blockchains like Solana and Base. So this is what is getting trading volume. This is what the exchanges are listing. This is, I don't know how to say it, like straight up casino. And when you're at the casino phase of the cycle, where are we on the chart? People think we're down here, but that's the sign of a gambler, right? They're winning and they're like, oh no, I haven't really won yet. I just won triple my money, but I didn't win yet. It's like, what? Like if you're at a slot machine at a casino, okay, and you're up 300%, you think you're going to still do better than that? That's what most people do. And they're like, yeah, I'm on a roll. I'm on a roll. And even if they move to another machine, right? Or in crypto, another crypto, it's the same odds. It's the same odds. And by the way, the odds are now not in your favor like they were in previous cycles. This is where a lot of people are getting mixed up. They're like, but Cryptoviser, in previous cycles we did this, previous cycles we did this. It's like, yeah, but we're not in previous cycles. We're in this cycle. And there's a lot more cryptos to compete with. A lot more cryptos, the market caps are spread out, right? The overall market cap of crypto is more spread out. We have a lot more big institutional money trying to push their own coins and their own agendas and their own blockchains and technology. So you have all of these new products like perpetual futures here and options over there, and these all are meant to keep the price stable. Wall Street likes stability. That's what they like. They don't like volatility. And a lot of people have theorized over the last few years that this will be the last cycle. And there's something to say that maybe last cycle was the last cycle in terms of these major gains. Everybody's still chasing this first cycle where they're going to go up from a penny to like $100, which is like a 100,000x return, something like that. That's not happening anymore. It's just not. And sometimes it does happen with some altcoins or meme coins, like what we're seeing, Coinbase listing these meme coins that are half the market cap of Internet Computer. I mean, guys, that's where we are in the cycle. It's where we are. Meanwhile, Jim Chanos back in the mix. I think he's hilarious, especially with his just straight takes on what is going on in the markets. He said, wait, what? This is obviously a joke, right? And that's in response to this tweet from Brandon Lutnick. He said, in May, we announced our gold-backed Bitcoin fund was coming. Today it's here. Institutional investors want exposure to this growing asset class combined with the downside protection through gold holdings. Cantor Fitzgerald is leading the way, supporting digital innovation and opening the door for more players to enter crypto market with confidence. And so now they've created, I literally was like thinking about this for like a good 10 minutes. Like, wait, what does that even mean? Gold-backed Bitcoin fund, right? And they want the downside protection through gold. So if Bitcoin goes down, gold is going to hold. And so why not just hold the gold then? Right? Because in my view, it sounds almost like you're on both ends, right? You're short and long in the same position in the same fund. And so if one goes down, the other goes up, you're at a net nothing, zero, right? You're at the same point. It's interesting, and I obviously wish them luck because I think any exposure to crypto in these kind of products is good and kind of expanding the institutional usage of crypto, but it is kind of a signal of where we are in the cycle. Again, none of this happened in the bear market. Think about that. None of this happened in the bear market when it would have been most bullish to do it, but they're doing it now at potentially the top. Meanwhile, Metaplanet, guys, take a drink of your coffee or tea or whatever you're drinking today. Take a sip of it, sit back, because this is about to, you guys are probably going to say, wow, Cryptoviser, you are right. You are right. Jim Chanos said, did Metaplanet just raise $1.4 billion at an effective price of $3.76, which is a 15% discount to their current share price of $4.44? Is that raise an effective 1.2 MNAV? And effectively, he's responding to the fact that Metaplanet finalized its international offering to 385 million shares for $1.4 billion. And he's correct. They did it at, we could do the math in Japanese yen, 205 billion Japanese yen. That looks like billion. 205 billion Japanese yen, and we divide that by 385 million shares. That's 532 Japanese yen per share is what they sold at. And if we look at Metaplanet right now, I'm recording this like a day or two after, we're sitting at 714. And before that, we were sitting at 853. So I want you guys to think about that. We're at 714 per share, and they sold at 532 per share. So if I'm a shareholder in Metaplanet, what does that tell me? And by the way, this isn't Japanese yen, but the same thing in dollars. That tells me that Metaplanet is worth basically about a quarter less than what it's trading for. Metaplanet should be trading at 532 yen, period. Because that's what they just sold on the market for. That's what they just did. And again, so it's all of this money coming in, but they can't even sell at the price that it should be, telling me it shouldn't be at this price. And it's telling the market that as well. Like they're literally telling you, like Michael Saylor, he's telling you don't buy MicroStrategy, buy Bitcoin because they're selling MicroStrategy and buying Bitcoin. So you can follow that trade, but people are like, no, Cryptoviser, MicroStrategy is a better investment because it is a 1.0 accretive Bitcoin per share. It's accretive, it's accretive, it's accretive, it's accretive. And I'm like, define accretive because it's all just financial gibberish. That's where we're at in the cycle. Meanwhile, it gets better. It gets better. Nakamoto, right? Kindly MD, which converted to Nakamoto, another Bitcoin treasury company. David Bailey, the CEO, said Nakamoto is backing the world's leading Bitcoin securities. To that end, we've made a long-term strategic investment into Metaplanet. 30 million deployed at 553 yen per share, and we're trading at 700. Well, now it's higher than that. It's 714 per share. Guys, we are now at the part of the cycle, and I want you to really pay attention because remember what happened with FTX. FTX was the last man standing, right? Celsius, Voyager, 3 Arrows Capital, Terra Luna, BlockFi, everything went down before FTX. But FTX was going to go down because they were all just borrowing and lending to each other. Now we have Bitcoin treasury companies, which, by the way, Kindly, which is Nakamoto, since they made the announcement of purchasing Bitcoin or changing to a Bitcoin treasury company, right? It went from $1.79 a share all the way up to $25 a share. It's showing it peaked at $34 a share. And now we're down to $4 a share. And what are they doing? They're buying other Bitcoin treasury companies in other countries that are highly overvalued based on the data that I just showed you about their raise. Now, granted, they're buying at a discount, but what nobody seems to be asking or wondering is what if the Bitcoin price goes down? Like these Bitcoin maxis seem so convinced that the price of Bitcoin can't go down below $100,000 that they're just looking at the valuations of these companies like, oh, well, Metaplanet is, they gave us a little bit of a discount, but now it's trading higher. It's like, yeah, but what happens if Bitcoin goes to $50,000? All of these Bitcoin treasury companies, they're all dropping 50%. Minimum. I think it's actually going to go, they're all going to go into a discount to the MNAV instead of being at a premium to the MNAV. Because in a downtrending market, that premium is going to collapse. 100%. It's going to collapse and potentially go into the negative. And then some of these companies are going to start buying back their stock. That's what they say. But now they're raising money to buy back their stock and buy Bitcoin. Think about that. Where are they going to get the money from that in a downtrending market when the premium is compressing? They're not going to be able to. But that's not what they're talking about. They're just saying, oh, we're investing in Metaplanet. It's like they're giving money to Metaplanet so that Metaplanet buys more Bitcoin. So they technically own more Bitcoin as well. Doing this at the top of the market, at the end stages of a bull cycle, and no foresight into what's going to happen in a bear market. And by the way, all the Bitcoin mining companies did this in the previous cycle. They were all spending all their money, pre-ordering shit in the next year, prepaying for things, and a lot of them collapsed within 1 year of that happening. Are we going to see a collapse again? Hopefully not, but I don't know. It's not looking good. Meanwhile, remember we just talked about earlier in the video, right? About CBOE launching derivative products. Remember? Well, I told you it's going to get better, right? MicroStrategy now says options are now listed for trading on Strife, Stretch, and Stride, our Bitcoin-backed preferred equity stocks. So now you can print money by just selling shares in the open market. You can print money by selling options on these preferred products that you own. Even though we're seeing waning demand for these debt products or these preferred equity products, and even less interest in buying the shares of MicroStrategy itself when they're selling. But what are derivatives going to do? I think derivatives are going to just accelerate this, and they're going to push everything lower. That's just my viewpoint on it. Not necessarily options, but definitely futures products. So we have to keep an eye on that. Meanwhile, Jim Chanos is calling out MicroStrategy, saying MicroStrategy's deferred tax liability was almost $6 billion at the end of June. It was not. It was actually about twice as much as their preferred outstanding debt on that date. Now, again, this is called deferred taxes. From my understanding, it's deferred because they haven't realized their gains, and so they're claiming that they're making through accretive dilution or whatever they're calling it. They're claiming that they're making about $10 to $30 billion in the quarter in revenue, and so they would have to obviously pay tax on that. But since they're not realizing that gain, I guess it's considered a deferred tax. But that's what Jim Chanos is kind of calling out as a risk. We also see here that somebody wrote to Jim Chanos and said, Michael Saylor was at the given a keynote on Bitcoin and MicroStrategy. And he said, if you haven't taken an hour to listen to Michael, I recommend you invest this time. MicroStrategy deserves a price premium over the Bitcoin held. End of story. Jim Chano says, I'm pretty sure the guy selling you the new MicroStrategy shares as fast as he can would say that. End of story. And I would agree. He's trying to make it seem like MicroStrategy is the best thing, but it's not for us. It's not for regular everyday people. They're selling this to institutions. Are institutions going to keep buying? Likely, because they have a much longer time horizon and they're not worried about the potential collapse, right? Effectively, they have unlimited money. You and I don't, right? So we have to keep that in mind. He's selling shares and people are like, you should buy now before you run out of time. It's like when a lot of the regular everyday investors are saying that, they know. They know. They can't sell. They know the market's going to fall because they have to convince you to buy more. They have to convince you that what Michael Saylor is saying is accurate and it's going to occur. But Michael Saylor's on a much longer time horizon than most of us, right? He's thinking about generations and 50 years from now. Most of us are thinking, when can I get out of the market when this pumps, right? And so that's a big difference in overall sentiment. He says, how is paying $1.50 for $1 of spot a levered position for the purchaser? Isn't getting more than $1 of spot worth every dollar of equity put the definition of a levered position? Yes, exactly. And he says, more financial gibberish from Michael Saylor. A Bitcoin capital markets platform company rather than a Bitcoin treasury company is still give me money to buy Bitcoin, nothing more, nothing less. They're changing how they say it. They're no longer saying Bitcoin treasury company. They're saying a Bitcoin capital markets platform company. What does that mean? Nobody knows, and that is why, again, we are at peak euphoria in the cycle where and by the way, I actually think we're actually after peak euphoria. Because again, this idea that somebody has to post a video of Michael Saylor and say, well, Michael Saylor said we're going to go up because it's a levered position. Oh my God. Guys, Michael Saylor can say whatever the hell he wants. I can say, and people are mad at me, Cryptoviser, how can you say we're going up one day and the next day you say we're going down? It's like, because my thesis is not just a one direction thing. And markets don't move like that either, right? You could have 50 cryptocurrencies that gained 100% in the day and another 50 that lost 50% in a day. And so just saying, well, everything's going up, it's like, no, everything is not going up. And even if everything is going up, that's the indicator. It's amazing to me when we do reach the top. And by the way, I've been there before, guys. That's why I started this channel. 2017, I was buying the top of the market in everything, buying the top. I think Cardano went to $1.10 from 2 cents and then went back down to 2 cents. Didn't sell because no, we're going higher. That is the greed in the cycle, right? And a lot of people are doing this. Bitcoin, when we hit $20,000 in 2017, a lot of people were buying then. Did I buy? I don't think it was at 20,000, but it was definitely high, right? By 2018, the bear market was in, right? And a lot of people lost a lot of money. And the same thing is happening this cycle. It's just happening differently. But the indicators are there, and the signals from Wall Street are there. They are they're going to take down Bitcoin and Ethereum if it gets too high. And now they have the products through the Bitcoin treasury companies, through the options, through the derivatives, through the futures products, perpetual futures products. And by the way, they can trade on perpetual futures and it has no impact on the price, right? Because think about it. If you're shorting MicroStrategy sees that, right? And they can stop issuing new shares and potentially push the price up and then liquidate the shorts. But in perpetual futures, it's much harder because perpetual futures are not actually touching the Bitcoin. So it doesn't necessarily impact the underlying market. So if you're short in a perpetual future, there's no such thing, in my view, as a short squeeze in the traditional Bitcoin, like in physical Bitcoin. There's no short squeeze that's going to come from the perpetual futures market. And so if the perpetual futures market is betting against or shorting Bitcoin, and then the futures market gets wind of that, and then they're like, well, we should probably start going down. We should probably start repositioning. They may just pull out of all physical Bitcoin trades, let it fall, and then buy back in. It's not a traditional short squeeze. And so you guys have to keep that in mind. This is, again, I think there was a lot of manipulation in the previous cycle in these coin, Cardano, Litecoin, definitely Internet Computer, to the downside. And then there was probably perpetual future manipulation to the upside for FTT and Solana and all these other coins. It's just a theory, but based on the analysis that we've done, it seems like that is what occurred. So let me know what you guys think. I mean, where are we in the cycle? And again, none of this has anything to do with what the Federal Reserve is or is not going to do, or what they are or are not going to do in the future. None of this has anything to do with that, because again, the Federal Reserve cutting rates is not printing money. And what brought us to the all-time highs in the previous cycle was the money printing. We don't have that right now. So anyway, I'll see you guys on the next video. Don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. We upload every single day to bring you the latest happening in the financial world. See you on the next video. Crypto on.